In this video, I'll cover everything high-yield savings account, or HYSAs. We will go over how high-yield savings accounts work, what types of HYSA are there, how to choose the right HYSA, the top HYSAs today, why you need a HYSA, how HYSA fits in your financial strategy. Some of the best high-yield savings accounts available right now are perfect for anyone looking to grow their savings passively. These accounts offer interest rates significantly higher than the national average, and I will review their pros and cons to help you find the one that best fits your needs. I'll also explain why having a high-yield savings account is one of the easiest ways to make your money work for you. Hello, friends! I am happy to have you here and to help you explore your options when looking for a savings account that pays you better dividends for your money instead of the few cents on the dollar that traditional savings accounts pay. I am sure that you might have heard the term high-yield savings accounts, aka HYSAs as we call them. But what are they really? Well, let's dive right into it. High-yield savings accounts, or HYSAs, are specialized bank accounts that offer significantly higher interest rates than traditional savings accounts. While a conventional savings account might offer a minimum 0.01% to 0.05% annual percentage yield, or APY, and HYSAs can offer rates as high as 4% to 5% or more. These accounts are typically offered by online banks with lower overhead costs than physical building institutions, allowing them to pass the savings on to customers through better interest rates. Online accounts also tend to offer more features, such as robust mobile apps, and often waive monthly fees if conditions like direct deposit are met. However, traditional banks have the advantage of offering branch access, ATM networks, and sometimes more personalized service, which some customers prefer better. Now, you might ask, what is the role of interest rates in personal finance? We must understand that the Federal Reserve plays a major role in determining interest rates, directly impacting savings accounts. When the Federal Reserve raises rates to combat inflation, banks respond by increasing the interest rates on savings products, including HYSAs. The recent hikes in 2023 and 2024 have seen high-yield savings rates surge to around 4% to 5%, making now an ideal time to open an HYSA. As mentioned before, most banks that can offer higher APYs for savings accounts have no physical locations, meaning buildings or branches, and only provide their services online, with a very unique exception. Stay tuned to see what that exception is and what bank this may apply to. Banks such as Ally, SoFi, and American Express, among others, have taken the lead in offering high-yield savings accounts. The lack of physical branches means these banks can provide higher interest rates while keeping fees low. SoFi, for example, offers a 4.60% APY with no fees as long as you set up a direct deposit. More details on this later. These banks usually provide robust mobile apps that allow easy access and account transactions, like mobile check deposits and transfers. To understand how high-yield savings accounts work, we first need to understand interest rates and compounding. This is the most valuable information you need to learn to make strategic financial decisions. In a high-yield savings account, the interest rate you earn is expressed as APY, annual percentage yield, which accounts for compound interest. Compounding means that your interest earns interest over time, which allows your savings to grow more quickly than with simple interest. High-yield savings accounts generally compound interest daily or monthly, significantly affecting how much you earn over a year. For example, with a 4.5% APY, a $10,000 deposit will earn about $450 over the course of a year if compounded annually. However, the amount would be slightly higher with daily compounding due to the interest being calculated more frequently. Now, to understand that a little better, we need to know what the differences between APY and APR are. So, let's break it down. APR, annual percentage rate, and APY, annual percentage yield, are two important concepts when it comes to understanding interest rates, but they serve different purposes depending on whether you're borrowing or saving money. APR is most commonly used with loans and credit products, like credit cards, car loans, or mortgages. It tells you the basic cost of borrowing money over a year, but it doesn't account for compounding, which is when interest is added to your balance, and then that new balance starts earning, or charging, interest. So, with APR, you're just seeing the flat interest rate on the loan without the extra impact of interest being charged on top of interest. APY, on the other hand, is used when you're talking about savings or investment accounts, like a savings account or a certificate of deposit, aka CD. APY includes compounding, meaning it gives you a much clearer picture of how much money you'll actually earn in a year. For example, if you leave your money in a savings account, the interest you earn gets added to your balance, and then the next month, you're earning interest on both the original money and the interest you already earned. This effect of earning interest on your interest makes a big difference over time, which is why APY is a more accurate measure of how much you'll earn in the long run. In simple terms, APR tells you how much you'll pay when you borrow money, but doesn't include the extra costs from compounding. APY tells you how much you'll earn when you save money and does include the benefit of compounding. So, when you're comparing savings accounts, always look at the APY because it gives you a true sense of how much your money will grow after a year. But when you're comparing loans or credit cards, focus on APR to understand the basic cost of borrowing. Let's now review the difference between money market accounts and high-yield savings accounts. Money market accounts, or MMAs, are similar to high-yield savings accounts because they offer higher interest rates than traditional savings accounts. However, MMAs often come with check writing capabilities and may offer debit cards, giving you more flexibility in accessing your funds. However, they typically require higher minimum balances than high-yield savings accounts, and their interest rates can fluctuate more. We mentioned that high-yield accounts are generally unique to online banking, and when we say generally, it is because there are a few exceptions. Some credit unions often offer competitive, high-yield savings accounts with similar or better rates than traditional banks. Because credit unions are not-for-profit institutions, they can pass more earnings on to members in the form of higher interest rates. For example, Digital Federal Credit Union, DCU, offers 6.17% APY for balances up to $1,000. I'll provide more details on this bank later. Now, let's move on to how to choose the right high-yield savings account. When choosing a high-yield savings account, you'll want to consider several key factors, like APY. As we already discussed, a higher APY means more interest is earned, but be mindful that rates can change. Minimum deposit requirements. Some accounts require minimum deposits and/or balances. Make sure you understand what's required up front. Fees. Ensure the account has no monthly maintenance fees, ATM fees, or other hidden charges. Always read the fine print to find those details. Customer service. Look for banks that offer 24/7 support, especially if they are online only. Accessibility. If you need easy access to cash, find accounts that offer ATM access or provide easy transfers between accounts. Bonuses. Many accounts offer cash bonuses for setting up direct deposit or maintaining a certain balance, like SoFi's $300 bonus. These offers can be a nice boost if you qualify. Many high-yield savings accounts like SoFi offer their highest APY if you set up direct deposit. Others may have minimum balance requirements to earn the full APY, such as My Banking Direct, which requires a $500 minimum. Again, read the fine print to understand what those requirements are and maximize your interest. And since online banks offer these high-yield accounts, the quality of their mobile app is important. Features like mobile check deposit, quick transfers, and bill pay can make managing your savings easier. Banks like Ally, SoFi, and American Express offer some of the best apps in the industry. Now, let's move on to what those top high-yield savings accounts in 2024/2025 are, and what are their benefits and the requirements you will need to comply with. I am not listing these accounts in any specific order. Let's start with SoFi, which is one of my personal favorites. SoFi offers an impressive 4.60% APY, but there's a catch: you need to set up direct deposit to get this rate. Without it, the APY drops to just 4.30%, which is still great if I may say. SoFi also provides a bonus of up to $300 when you open an account and set up direct deposits. This bonus is a great deal, especially for those planning regular deposits. Other perks include no account or overdraft fees, FDIC insurance up to $2 million, which is above the standard $250,000 due to SoFi's partnership with a network of banks. access to over 55,000 fee-free ATMs, early paycheck access, up to 2 days early. Round up and save. All of your debit card purchases are automatically rounded up to the next dollar and deposited into your savings vault once you set up this feature in the app. These perks make SoFi one of the best all-around options, especially for people who want additional features like mobile banking, fee-free ATMs, and direct deposit bonuses. You will find this and the other banks' links in the description box below. Let's move on to American Express High Yield Savings Account. Another solid option is American Express, as this bank is offering a 4.10% APY. One key advantage of this account is its simplicity. Unlike SoFi, you don't need direct deposit to get the full APY. Plus, it has no monthly fees or minimum balance requirements, making it easy to set up and manage. However, it lacks some features like ATM access and a cash bonus for new accounts. Despite this, American Express is known for its excellent customer service and reliable mobile app. It's a great option if you want a straightforward, hassle-free savings account with a solid interest rate. Next on my list is Barclays Online Savings Account. This bank offers an attractive 4.50% APY with no minimum deposit or balance requirements and no monthly fees. This APY makes it an appealing choice if you want flexibility and aren't looking to tie up a large sum of money. However, Barclays doesn't offer a checking account to pair with your savings, and there's no access to physical branches or ATMs, which could be a drawback for those who prefer having a brick-and-mortar option. That said, if you don't need in-person banking and want a high APY with minimal restrictions, Barclays is a strong contender. Our next option is Bask Bank Interest Savings Account, 4.85% APY. For those looking to maximize their savings, Bask Bank offers one of the highest available annual percentage yields at 4.85% and 4.74% interest rate. There's no minimum balance requirement to earn this APY, and you won't be charged monthly fees. However, like any other online savings account, Bask Bank doesn't offer ATM access or physical branch services, which could be limiting for some users. Bask Bank is ideal if you're comfortable managing your account entirely online and want to take advantage of one of the highest rates available in 2024 and most likely in 2025. Let's now move on to Digital Federal Credit Union, DCU, Primary Savings Account. Remember when I mentioned a bank that was the exception to the online-only service? Well, this is the one I was referring to. DCU offers customer service and online banking as well as in-person, as it holds 5,900 plus locations and 80,000 ATMs in the US. Digital Federal Credit Union, DCU, Primary Savings Account offers a whopping 6.17% APY on balances up to $1,000, one of the highest rates you'll find. The APY drops significantly for balances beyond $1,000, but it's still a fantastic option for those with smaller savings. This account is great for beginners who want to maximize the return on their first $1,000 in savings, although the benefits drop off if you plan to save more. Overall, I will say this is a great start. Another bank who has been on the top list this year is CIT Bank, which offers an attractive 4.70% APY with a balance of $5,000 or more for its Platinum Savings Account and 4.35% with a minimum of $100 for its Savings Connect account. This account has no monthly fees. CIT Bank also offers e-checking accounts and a debit card with no ATM charges or fees, which makes it an appealing choice. That said, if you don't need in-person banking and want a high APY with a minimum balance, CIT could be your option. Let's now move on to Western Alliance. This bank offers an impressive 4.96% APY on your entire account. You can open an account with $500, no maintenance fees, and zero account activity. Pros: compound interest for the high-yield savings. Premier account accrues daily and compounds and is paid to you monthly. Interest begins the business day funds are received. You can withdraw from your high-yield savings Premier account by logging into your portal and transferring the funds back into your linked account. Cons: the high-yield savings Premier account excludes debit cards or checks. Limited customer service support, as they are only open Monday through Friday between 6 a.m. to 6 p.m. Mountain Standard Time. The last we will review today is Discover. This bank offers 4.10% APY with zero money to open the account and zero monthly fees. It also offers a $150 bonus if you deposit $15,000 within the first 45 days, or $200 if you deposit $25,000 instead in the same 45 days period. However, to qualify for the bonus, whichever you choose, you must enter the applicable offer code found in the fine print on the main page. Please make sure to read that print to understand the requirements to qualify for this bonus, and/or if still applicable at the time, you open your account. Discover's account offers zero money to open the account and no fees on monthly maintenance, official bank checks, excessive withdrawals, expedited delivery for official bank checks, deposited items returned, stop payment order, insufficient funds, and account closure. Remember, these are just a few options. You will find many other ones if you search in Google, but as I always say, do your research and choose the account that fits your needs, meets your criteria, and has the most benefits for you. Okay, let's review the most frequently asked questions that people have when it comes to high-yield savings accounts. The first question I get is, are high-yield savings accounts safe? The answer is yes. As long as the bank is FDIC insured, Federal Deposit Insurance Corporation, your money is protected up to $250,000. Some banks, like SoFi, offer expanded FDIC coverage for up to $2 million by spreading your money across multiple banks in their network. The next question is, can I withdraw my money at any time? High-yield savings accounts generally allow easy access to your funds. However, some banks may limit the number of withdrawals or the amount you can move each month. It is very important to check these limits and do your due diligence to review all the requirements and regulations in each bank. The small print is typically where you will find things that you, the customer, need to be aware of. So please make sure that you thoroughly review the bank's policy if you need frequent access to your money. Another question is, how do interest rates change over time? Even when the interest rates in these accounts are very stable, they can also be variable. Let me explain. Like everything else in the economy, HYSAs are also influenced by the state of the economy, which means they can change based on economic factors, particularly moves by the Federal Reserve. Currently, rates are high due to recent rate hikes, but they may fluctuate in the future. The next question is, what happens if I don't meet the account requirements? Some accounts, like SoFi, offer their highest APY only if you set up direct deposit. If you don't meet the requirements, your interest rate will drop, so it's essential to understand and meet these conditions to maximize your earnings. The same applies if the accounts are subject to minimum balances, monthly fees, service charges, etc. Again, research and be aware of all these details before opening an account. If the information provided on their site still feels confusing to you, please call the bank's customer service and ask the questions you have until you know you have the information needed to make your decision. The other question I often get is, when should I open a high-yield account? My answer is always now. This is a great time to open a high-yield account due to the high interest rates. With rates expected to fluctuate based on Federal Reserve decisions, securing a high rate now ensures you maximize your earnings. Take advantage of those accounts that have minimum requirements. You just need to start. Remember, interest rates in high-yield savings accounts can fluctuate based on the Federal Reserve's actions. When the Fed raises rates to combat inflation, savings account rates also tend to rise, making these accounts more attractive. However, if the Federal Reserve begins lowering rates, we may see the interest on these accounts decrease, meaning savers should act quickly to lock in higher rates. Another exciting thing happening right now is that fintech companies are continuing to disrupt the traditional banking sector by offering innovative high-yield savings options. Platforms like Wealthfront and Betterment offer hybrid accounts that combine high APYs with investment options, making it easier for users to manage their cash flow while earning competitive interest rates. These accounts will likely grow in popularity as consumers seek all-in-one solutions for their finances. So, keep an eye on these. Let me know in the comments below if you'd like me to make a video about these accounts. All in all, financial experts predict that interest rates will likely stabilize over the next few years as inflation goes down. While rates might not remain as high as they are today, high-yield savings accounts will continue to play a vital role in personal finance, especially for those looking to keep their money safe while still earning a decent return. In summary, high-yield savings accounts are an essential tool for growing your savings without taking on the risks associated with investments. Whether you're building an emergency fund, saving for a large purchase, or simply looking to make your money work harder for you, these accounts offer the safety, liquidity, and earning potential to help you achieve your financial goals. By choosing the correct account, taking advantage of promotions, and regularly reviewing your options, you can ensure your savings grow at the highest possible rate while minimizing fees and maximizing flexibility. I hope this video has provided the information you need to understand what high-yield savings accounts are, how they work, and what to look for, so you can make an informed choice. Feel free to explore the options I mentioned in this video and check out the links below for more details on the best high-yield savings accounts available today. Thank you for watching, and see you in the next video with more financial tips.